Hi, good morning, good afternoon, everyone. Right, just before I start today's session, just want to be sure that you guys can hear me loud and clear. More importantly, see the slides, okay, and see a bit of my face. More importantly, the slides. So if you guys can hear me loud and clear, see the slides, see my face, please just drop a quick comment in the question box below. Okay, that was fast, Travis. Thanks a lot. All right, and I'm seeing a bit more attendees coming in now. Okay, so very quickly, let's not waste time. There are quite a bit of things to cover today with regards to the markets. All right, thanks, Gareth. Thanks, Langa. I hope I got your name correct. Okay, so today we're going to be doing a live trading session with me, Isaac. All right, it's not so much live trading, but I'm just going to give you a general broad-based market commentary and then put it together and hopefully find ideal setups in the markets, right? We can take a look at these setups together and then we can see what the best plays of the markets are. Okay, so with that, let's begin. Now, before I really go into the charts, okay, just want to put out a disclaimer out there that the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. Now, while FP Markets has made every effort to ensure the accuracy of the information at the date of publication, FP Markets does not give any warranty or representation to the accuracy, reliability, or completeness of the information. Further examples provided here are for informational purposes only. Now, having said that, it is my duty as the presenter to give you guys as accurate and as precise information as possible at the time of presentation. Okay, so that is my promise to all of you. All right, so just a bit about myself. I see some relatively new names. Okay, I do see some relatively new names, right? My name's Isaac. I'm based here in Singapore. Okay, and I currently hold the CMT and CFTE designation, and that would be the Chartered Market Technician and the Certified Financial Technician's accreditation. So what that means is really I just hope it puts all of you at a bit more ease when I share with you guys the broad market outlook, so that you guys also know that at least your presenter knows what he is talking and what he is sharing about. Okay, so I hope that puts you at ease. Okay, so today's webinar, very simply for the next 50 minutes to 1 hour, right? What we will be covering is I will share with you guys a broad market overview, okay? And then I will go into how we determine the risk sentiment for the day. And then after that, I'll look at the charts to see what the best plays are. And then after that, I'll wrap it all up, and ideally we wait for our analysis to play out. Okay, so very quickly, I just want to open up the chart over here. Now, generally when we're talking about markets overview, what do we normally do, right? At the start of every day, okay, it is very important for a trader to know a few things. Currently, one, okay, sorry, let me just put this in a text box, it'll be easier. Okay, so one, a trader needs to know key events. Okay, so this is why we want to look at the markets overview. Okay, the second thing that we want to know, apart from the key events, which is really the fundamental plays that will affect the markets, all right, the second thing that we want to know is risk sentiment. Okay, so risk sentiment is very important, right? Some people tend to downplay risk sentiment, but I personally think it's important. Risk sentiment for me is not, okay, it is not the be all and end all. It is just driving, okay, looking at the road signs. So imagine if you're driving down a foggy road, okay, there will be a road sign ideally that says, oh, there's fog ahead, so drive carefully. Over here in Singapore, it makes us sound like a bunch of drunkards, right? But every now and then on our highways, the government, the traffic police would have to actually put up, remember to not drink and drive, right? Get home to your loved ones safely. Okay, so risk sentiment is something like that, right? It gives you a warning, it gives you a heads up, right? So it sort of flash this kind of warning signals to you guys, for you guys to be careful. So risk sentiment is very important. Okay, so after knowing the key events for the day, okay, and then after that knowing the risk sentiment, we can therefore go to the juiciest part, right? It's like a sandwich, right? We can go to the juiciest part of the plan, which is really to look for setups. Okay, so that is the third point. All right, so this is essentially what I will be taking you guys through every time we do a live trading session. Okay, so this is very important. Why? Reason being that this is a sort of a ritual that I follow every day when I look at the markets. Okay, even whether I'm doing analysis for my clients, right? This is the ritual that I have to follow to help me to understand what is going on in the markets around. Okay, so some of the big news recently is that, you know, especially with the US side, okay, the US side, the key focus is really the inflation risk. All right, so there is inflation risk in the US because of the 10-year treasury yield rates, right? So 10-year treasury yield has been climbing quite steadily at the start of the year. In fact, it's been climbing quite fast. Okay, and in fact, and yesterday, right, I think the high of the treasury yield, let's just pull out the chart of the treasury yield. Okay, wait, sorry, wrong chart. Right, over here, US 10-year. Okay, so on the daily, if we can see over here, right, yesterday's session, okay, topped off at 1.68. All right, the highest that we've been recently at since the start of 2021 is at 1.772. Now, ideally, right, the Federal Reserve tends to look at the treasury rate and try to keep it at 2%, right? So 2% inflation is healthy. It is a healthy economy. All right, but the fear right now that you guys should be careful about, especially when it comes to dollar pairs, when you guys are trading the FX dollar pairs, is that there is this yield rate fear. Okay, when the interest rates are climbing up too fast, too high, okay, that makes it a lot less attractive. That makes the US dollar a lot less attractive, right? Why hold cold hard cash when you can invest it in something else that pays a lot higher an interest rate, right? So that's the general idea of things. Okay, so with the eyes of the markets, of institutions actually focusing on the yield rate, the 10-year yield rate, right, we have to be a bit careful, especially when we are going to long the dollar. Okay, so this is how knowing the fundamental picture actually helps us to be a bit more cautious with our trading. All right, hi Bartholomew. All right, good day to you as well. All right, good to have you here. Okay, so that's the first big story of the day, is that, you know, all eyes are on the inflation yield rates. Okay, now the second big story of the day, which is really a spillover from yesterday. I'm not sure how many of you know. Anybody wants to give it a guess? Okay, there was a bloodbath in the markets yesterday, right? I'm not sure how many of you are actually following it pretty closely, but it is quite a hype kind of thing. So anybody wants to give it a try? All right, so don't be shy, guys. Okay, for those of you who have attended my webinars before, you guys will know that I really like to keep things interactive. I don't like to keep Q&A. I don't like to keep a question and answer section to the end of the presentation. Reason because you may forget your questions. Secondly, I may have trouble trying to collate all the relevant questions and then answering them, right? So I like to keep it interactive, flow with the entire group of you in this presentation. So if you guys have questions along the way, market related, even if not market related, that's fine, but preferably market related, right? Just feel free to throw these questions my way. I'll do my best to answer. All right, so Stefano and Bartholomew, great. All right, it is the Bitcoin crash. Okay, so the crypto space was really dying yesterday. All right, while generally speaking, okay, the S&P stocks generally finished yesterday's trading session slightly flat. All right, Bitcoin crypto space actually crashed quite a bit, and crypto fell all the way down to the 32,000 level. Okay, so I was actually telling my friends that, you know, hey, if you guys really want to get into on crypto, right, please start looking at the 32,000 level. All right, so that was really something that was really something that I was dropping calling it for. Okay, so just to show you guys a bit of a screenshot. Okay, not trading advice or anything. Anyway, the price is done, right? Just to show you guys, this was something that I actually sent over to my friends yesterday. Okay, so 2 days yesterday 5 p.m. Singapore time, right? So this was something that I actually pointed it out, right? So it is more for informational purposes only that I really believe technical analysis works, right? So apart from that, okay, so Bitcoin really dropped quite a lot. All right, some people were already saying that, hey, you know, there's an oversold signal on the RSI. Okay, but I just want to caution all of you who are into Bitcoin or crypto for that matter, is that personally I think that history gives us a very good lesson in terms of what we can expect. Okay, the idea behind Bitcoin, the technology behind cryptocurrency, blockchain, I can fully put myself behind that technology, and I agree that that technology will be really good. But cryptocurrency to replace fiat currencies is not something that I think will happen in the next 5 to 10 years. Okay, in the next 5 to 10 years, I don't think cryptocurrency will entirely replace fiat currencies because governments, it would mean that governments actually lose control over their inflation rates. It will mean that government actually lose control of the monetary system and the payment system in their own individual country, which is why really China started clamping down, right? The big story really, some people, right, that I spoke to, they said, oh, you know, it's all because of Elon Musk. Well, I think Elon Musk is just was just like the catalyst, so to say. Okay, when he said that, oh, Bitcoin mining is damaging our environment, so perhaps maybe Tesla will not accept payments in Bitcoin anymore, and that really started the drop, right? But like I said, that was the catalyst. What was really happening behind the scenes is that China, the regulatory watchdogs in China, were already clamping down on cryptocurrencies, right? Saying that it's not a very stable and reliable way of payment, and it's not something that can be easily regulated. So that's why China was clamping down on it. So you can believe all the fundamental news you want. I want to share with you guys something that's a bit more interesting. Okay, I found this on Twitter. I'm not sure if you guys can see this, right? But it was actually a series of screenshots of a post saying that, you know, there is a bit of a coordinated sell-off right here and this was on the 18th of May, all right, a few days ago, 2 days ago. There was there will be a coordinated sell-off to drop prices below a certain threshold just to liquidate one certain shareholder. Okay, and then once liquidated, the plan is then for all the other crypto funds to start buying up the reserves to bankrupt this one individual. Okay, and then after it also goes on to say, all right, the drop is going to be big and fast. 35K limit order if you want to be safe, but you can probably go as low as 31.25. Okay, so they were saying that it can apparently go as low as 31.25. But if you guys saw my screenshot earlier just now, okay, I was saying that 30,200 could be the next level. All right, so let's just quickly go over and take a look at Bitcoin. All right, so Bitcoin, where did price drop to? I was calling for 30,200. All right, it went all the way down to 28. Okay, but 3,200 was just slightly below. Right over here, it depended on what exchange you use. Okay, price actually fell all the way to 34.66. All right. So okay, so Take, I hope I got your name correct. All right, I was trying to figure out how to pronounce your name. Please don't take offense if I got it wrong. So wasn't Bitcoin chart a textbook wick-off distribution as well, which suggested the sell-off as well? Yes. Yeah, it could be attributed to that for people who actually follow wick-off method, right? A very clear distribution. Okay, just making higher highs, and then after that, really started off the sell-off. Some people could also argue that this is a Elliott wave 1, 2, and third wave done, right? So if you do an extension, 0.1, 0.2, 0.3, and you open up all Fibonacci ratios, okay, you can see that the color is not very nice. Let me just change the color, but you can see that the Elliott third wave falls right on the 3466, which is the 161% extension as well. Okay, so it is possible to use for those of you here who are still a bit on the fence about technical analysis. Okay, technical analysis does work. I'm not saying it's the holy grail. I'm saying that it does work, and when it works really, really beautifully. Okay, so that was the second big story, right? As that there was a big meltdown in the crypto space, with Bitcoin falling the most. All right, so that was really, really scary. And as of this morning, okay, today it bounced. Where to? All right, there are people that will say that, okay, look, we are gonna go all the way back up again. Now, if you are an Elliott Wave subscriber, okay, since we are on the topic of Bitcoin right now, if you're an Elliott Wave subscriber, after the third wave is done, you should see a wave fall. Now, Elliott Wave's rule states that wave 4 should generally not, okay, retrace more than 50% of wave 3. Okay, so wave 4 normally retraces to 38%, sometimes 50%, very, very rare cases 61.8 retracement, but that is really the maximum for me. All right, so 50% would be over here. Okay, we are already testing the 38, 50% is over here. And if you look to the left, there is a very strong graphical overlap, support turn resistance. Okay, so 50% is at the 44,900 level, which could be close to the 45,000 level first. Okay, so that would be my first target. But then again, wave 4 should always come in 3 waves. Okay, so if wave 4 comes here, it comes back down, then it could go to 61.8, which is the 48,000 level. And then after that, there could be a further drop if, again, you're an Elliott Wave subscriber. Okay, so I have a question over here from Gareth. So do I believe Bitcoin will bounce back above 50,000, right? It's going to be a bit of a struggle to say that Bitcoin will bounce back above 50,000. Now, this is on the daily chart, okay? So over the next couple of 1 to 3 weeks, I don't think we're going to see, okay, 50,000. There is a possibility because Bitcoin is so volatile and it moves really, really fast, right? But I would just say, ideally, around the next 1 to 3 weeks, we should not see Bitcoin back to 50,000 yet, okay? So that is what I think it would be. All right, Gareth, I hope that answers your question. Okay, so that is the second big story of the day, right? So the first big story is the inflation yields, okay, the inflation fears. The second big story is crypto melting, right? The third story is very simply the story of oil. Okay, for those of you who do not know, oil is a very good barometer of the markets. Okay, why? Generally when the world economy is doing well, oil prices tend to rise higher. Now, when oil prices tend to drop, okay, it could be due to the OPEC group manipulating the prices, or the demand for oil is very little. Okay, and how do we know a demand of oil very little? Because when there's very little demand, sellers tend to depress their prices. Nobody tends to buy it up. All right, so it's not worth it. Okay, and oil, most of you will know, is really the basic one of the basic commodities that our industries runs on. Okay, so since we're on the topic of oil also, let's take a look at oil. Okay, I don't like, this is the daily chart of oil. We have seen oil dropping, right, for 3 consecutive sessions now. On the weekly, if we were to zoom out to a weekly, we see a strong preceding trend that makes one top, goes and makes a second top, I'm thinking we could actually drop down to the weekly neckline, and that would give us a double top pattern, a impending double top pattern. And once the impending double top pattern breaks, right, then we're going to see a further meltdown of oil, and that would not be for the good for the global economy. All right, but if we are traders, we don't have to be worried because we can actually play both directions. Okay, why I'm thinking oil could drop lower is technically, okay, wait, sorry. Let me just cancel all drawings first. And let me just structure this nicely for you guys. Let's start off with the fundamental story for oil, right? So oil, what is happening recently is that, you know, over in the West, right, places like the UK, okay, places in the US, they're starting to open, right, major cities. Okay, the UK is also reportedly starting to reopen their beaches, right? So the virus situation seems to be improving over there. I've spoken to our friends over at FP Market who are based in Cyprus and saying that, you know, while they're being cautious, being safe, you know, situation seems to be improving. I've spoken to my cousin over in Denmark, right? Situation there is improving as well. However, it's not so the same over here in Asia, right? For those of you who are in Asia, my Asian friends, okay, you'll know that in Asia, the story is completely different. There is this Indian virus variant that is supposedly more contagious, okay? It's easier to catch it and it spreads really, really quickly, right? So Singapore, we're back in a lockdown again. And as we know, India, they are starting to warn of a third wave, okay, of a third wave of virus cases, right? So that is something that is a lot scarier, okay? And India is the world's third biggest importer of oil, which then means that if they're really hit hard, okay, they're not going to be able to restart their economy anytime soon. The demand for oil will actually drop, right? So when the demand for oil drop, nobody's buying up oil, okay? Oil prices tend to drop. So that's the first factor, the first fundamental factor. The second fundamental factor is that the US and the Iran has reportedly started on their nuclear talks, okay, their nuclear deal, right? Previously during the Obama administration, okay, US and Iran came back to a nuclear deal, okay, which was good, right? They for Iran to settle their nuclear issues, okay, and to play nice with regards to the nuclear watchdog, right? Then the US will ease sanctions on them and allow Iran to start selling oil into the markets again, right? And then that was stopped. That was reversed when President Donald Trump took over, and now President Joe Biden's administration is also discussing with Iran, right, resuming this talks. Okay, so they have announced last night that they actually made progress. Okay, and with that progress, which is seen as a good thing for Iran, we then can expect, right, Iranian oil supply to start coming into the markets. And for this second fundamental factor, which is why we can expect oil prices to drop lower. All right. Now, moving on to the technicals, okay, looking at we already saw the weekly chart of oil. Now let's go on to the daily. On the daily, a very clear trend line breakout. Okay, a very clear trend line breakout. Let me just change the color. I'm a bit, okay, yeah. So we have a breakout of this structure. All right. If anything, I'm expecting a trend line breakout retest and then price to drop lower at least to the last swing low. Remember on the weekly, we are saying that it could form a double top pattern. Okay, so that's 60-30 on Brent crude oil, right? And if we do a retracement, okay, 61, the immediate target is around the 64 level. Okay, so I have a intermediate target at 64. All right, one intermediate target at 64. Of course, my final longer term target for oil will be at 60-30. All right, so let's just go down onto the 4 hours and just see. Okay, tidy things up a bit. I'm going to remove this. Sorry, I'm going to remove the Fibonacci level because it looks a bit complicated. Okay, so on the 4 hours, it seems like we already have this trend line breakout and retest. All right, and it's already dropping down to the 64 level, all right, which then breaking below the 64 level, we can get ready to go short to the 60.26 level. All right, so this is something. These are the key levels that I really will be looking out for. If price comes back above this trend line here at a 67.40, I'll round it off to 67.40. Okay, it would reintegrate the trend line. Then this would be a fake out. Then I can safely say that, hey, look, we're probably going to go long again. Okay, so these are the key levels for oil that I'll be looking out for. With a break and a close below 64.08 will definitely give me very good shorting opportunity down all the way to 60.26. All right, so that's the idea that we have on oil, putting together the fundamental and the technical picture. All right, so back to the slides. Okay, for markets overview, the three big stories for the day that we have to be careful about, all right, is the US inflation fear, okay, the crypto space, for crypto traders out there, that's something that you want to be careful about. And of course, oil, which gives us a broad idea of the market recovery, the global recovery of the recovery of the global economy. Okay, now we move on to risk sentiment. So there are people, I'm not sure if you guys are familiar, right? Risk sentiment, generally easy, right? Like I said, risk sentiments are like warning signs along the highway when you drive. It provides you a overview of what you can expect ahead. Okay, so just because you see a sign that says go slow, 50 miles per hour or 50 kilometers per hour, that does not necessarily mean that you have to immediately go slow and immediately drop your speed down to 50 kilometers per hour, right? You can still drive at 70 miles, 70 kilometers per hour, all right, that sort of thing. Okay, you just have to be a bit more careful. All right. Okay, so I have a question here from Tiro. Okay, so Tiro, you're asking me which side do I follow for my fundamentals? For me, if you ask me, the most reliable sites that I follow for fundamentals will be Bloomberg, Reuters, okay, CNBC, all right, and MarketWatch. Okay, so MarketWatch also have to depend on who's writing the article, right? Sometimes there are guest writers. Okay, sometimes there are people that just want to promote their own agenda, so you just got to be careful. But these are generally the bigger websites and a bit more stable, okay, to follow. All right, so that is Tiro, I hope that answers your question. These are the sites that I follow for my fundamentals. Now, the big brother here, okay, Bloomberg is a bit more irritating, right? They have a paywall that, unless you subscribe to, you're gonna have a bit of a trouble looking at their articles. All right, but on the whole, if you can get access on Bloomberg articles, they are very updated, they are written very well, right? So that is something that you guys might want to look at. Okay, so these are the big websites that I follow for my fundamentals. Now for technicals, as you guys will already know, technicals, no brainer. All right, technicals, I have it over here. All right, it's Finviz. All right, so Finviz gives me good technicals to let me look at the overall strength of the market. All right, so I can look at futures and it can show me the heat map, right, of indices, in the futures indices, energy, how energy is doing, right, soft commodities, hard commodities, okay, and then grains, and then we can also look at currencies. All right, so I love Finviz as well. It's free, it's good for technicals. Okay, so now that we have already actually done, right, our market overview, okay, what we really want to move to next is risk sentiment. All right, so very quickly, wow, okay, time passed really fast. Okay, so risk sentiment, very quickly, there are only a few key asset classes to look at. All right, one we want to look at is the S&P. Okay, but the S&P, because I'm based in Singapore, I don't like to look at the S&P outright. Generally, what I look at is the E-minis, okay, the ES, which is the S&P E-minis, is the futures. Why do I look at a future market? Because the futures market has a pre-market, right? Gives a bit of a, it allows for trading for us over here in Asia and even in Europe before the US market opens. So it is good to understand what the general market thinks of where the S&P is going to go when the S&P opens. Okay, so I like to look at the E-minis. The next one that we look at, okay, is definitely the dollar index. Okay, dollar index is a bit tricky, right? I'm sure some of you have heard me say this quite a number of times, especially regulars like Bartholomew, right? The dollar index has this unique theory called the dollar smile theory. Okay, so the dollar smile theory is actually a proper theory, right? So the dollar index, just because the dollar is strengthening, does not necessarily mean that the economy is doing badly. Okay, so some people like to be very closed off and box the dollar into a risk-off currency, right? That's not entirely true. Okay, so take some time to read the dollar smile theory. I think you guys would really like it and would better understand the behavior of the US dollar. Now, the other one that I really like to look at, okay, a bit more technical, which is really what I tend to look at for my clients back when I was serving the institutional trading desk of some of the biggest hedge funds and biggest investment banks in the world, right? They like to look at the US 2-10 spreads. Okay, it's basically the yield curve, right? It's the yield curve, the spread between the short term and the long term, the yield, right? So a steepening will tell you that the economy is generally doing better. A flattening of the curve will generally tell you that the economy is doing worse, right? So it's something to expect. Okay, then of course the easier way that I can recommend to you guys, right, would be to look at the volatility index, the VIX. Okay, so I'm just going to quickly run through, take about the next 5 to 8 minutes or so to run through this S&P dollar index and the VIX for you guys. Okay, the US 210 spreads will be a bit too complicated to properly run through with you guys. Okay, so S&P dollar index and the VIX. All right, so Hariharan, hope I got your name correct as well. Can I text technical tool that I suggested? Sorry, I don't answer your question. Hi Magun, no need for apologies, right? Glad to have you with us. You didn't miss much except the 3 biggest stories for for the day, but we're getting into the crux of the matter soon. All right, so while I'm waiting for Hariharan to retype his question, okay, let's go into the charts. All right. Okay, so let's take a first look at the S&P. So like I said, I don't like to look at the S&P based on the futures, the outright index itself. Okay, I like to look at the E-minis. Okay, ticker code is on TradingView is ES1, which means that the current traded contract is in front. All right, but now it's towards the end of May, right? So it is still possible to use the current contract, right? When we're in June, I would generally roll over to they have a ES2, okay, which is the next contract in front, okay? Because of futures, there is this thing called open interest, which is something that should be taken a look at, okay? So for now, we'll take a look at ES1. You can see that right now, okay, the markets are dropping, all right? What I see for S&P on the daily is that it could form an ABC wave. Okay, so we can use Fibonacci extension 0.1, 0.2, 0.3, and 100% is over here, which is in line with the graphical overlap. Okay, so that's 100% extension. Okay, graphical overlap over here, right? So resistance turn support. Now we can also do a Fibonacci retracement of the last move from low to high, and okay, give me a moment, I clicked the wrong tool. From low to high, And we can see that, you know, it's also pretty much in line with the 61.8 retracement. If I were to take from here, and it's in line with the 50%. Okay, so not an issue whether it's 50% or 61.8. The fact is that there is 100% extension in line with a 61.8 extension as well. Okay, so for me, the S&P, I'm thinking it could drop at least to the 39.75 level. Okay, so 39.75, I'm rounding the numbers so it's easier to remember. Okay, so S&P bearish, right? Let's take a look at the dollar index. Okay, so dollar index, okay, on the super long term, super cycle, we actually have a bearish dollar, right? If I were to draw a trend line from the low, cutting across, touch as many candles as possible without really cutting the candle body. Okay, you can see that there is a very clear, okay, trend line breakout retest, and we are going lower. Okay, but this is on the monthly, so let's go down to the daily. Okay, on the daily, right, we can expect a drop. Okay, looking at market structure, right, price makes lower highs and lower lows. Okay, so we can expect price to make a lower high and then after that drop to this swing low over here, or at least to the same low, right? So because right now in close we are right at a graphical overlap again. Okay, a bit hard to see if it's in candlestick. Okay, but we are in a graphical overlap right now. We can expect the dollar index to drop at least to the last swing low. Something got into my eye. Okay, let's go down to the 4-hour chart and we can see, okay, do a retracement of the last movement, high to low. Okay, we are currently, price has actually tested the 50%. Okay, price has actually tested the 50% over here. Now, if anything, price could also extend to the 61.8. All right, if price extends to the 61.8, I would definitely want to try to short the dollar because it's therefore holding below a very nice trend line, descending trend line resistance. Okay, so dollar, we're bearish as well. So S&P, we're bearish, dollar, we're bearish, right? This is inflation, interest rate fears. Okay, very clear cut, right? And with tech stocks dropping, so that's quite pretty clear cut. Now let's take a look at the VIX. Okay, so the VIX, very easy, teach you guys a very quick and simple mindless way of looking at a VIX. Just go to daily chart, convert it to a line chart, put the number, put a horizontal line that stretches across infinitely, and put 26. Okay, why 26, Isaac? You guys are going to ask. Because historically speaking, 26 is the level at which we start to see a lot of fear enter the market. Okay, so if I were to go back in time, right? Okay, in the Asian financial crisis, 1997 period, okay, we have the VIX spiking above the 26 level and then quickly coming back down. And then there were a lot of murmurs that, you know, hey, the Y2K bug is coming, right? So in 1998, 1999, Y2K bug is coming. Okay, year 2000, no Y2K bug, you know, but hey, you know, there's still a lot of volatility. The stock market's at all-time high valuation. What's going to happen? And then after that, we have the dot-com bubble burst, right? So over here was really the Y2K bug and the dot-com bubble burst, after which the market sort of resolved. And, you know, we see volatility at a low. And then, of course, 2008, right? In 2007, we're starting to see market murmurs again, right? The VIX was above the 26 level. We're starting to see market murmurs that, you know, hey, is something going on in the markets right now? Is this sort of still the silence before the storm kind of thing? Okay, and then of course during the great financial crisis, the GFC in 2008, that was when we spiked up like crazy for the VIX. And also as recently the 2020, we also spiked up like mad because of COVID, right? So you guys would also know that as well. So as you can see, the VIX currently we're actually approaching 26 level already, right? So it's quite close. In fact, I think we have actually touched it if we went to the daily chart, right? A few days back, right? We have actually spiked above the 26 level. Okay, so that's a bit of a scare there, something to be careful as well. So putting everything together, right? Just putting everything together very quickly. I want to leave the last 20 minutes to 15 minutes to look at charts. Okay, so S&P, all right, bearish. Dollar index, bearish. VIX, bearish. Risk sentiment. Okay, so now I'm going to tell you guys, do you think that, would you guys be very comfortable taking on more risk in the market right now, or you guys are going to be careful? Okay, fantastic. Yeah, so most of you are going to be careful. Magun, you're right, is risk off. Bartholomew, okay, I think you say that based on my past lecture, the market is risk on today. All right. I would like to understand why you would think that it's risk on. Okay. I'm not saying that I'm not trying to throw your idea under the bus or anything. Please don't take offense. Okay. I just want to know your thought process of why you would come to the conclusion that it's risk on, so that I can correct that, and instead of you constantly being trapped in the wrong way of thinking or wrong way of coming to that conclusion, right? We can improve from there. Okay, so generally when the S&P is down and the VIX, okay, the VIX is actually bullish. Okay, so not bearish. Okay, the VIX is bullish, right? Because we are approaching the 26 level. Okay, so bearish S&P, VIX bullish. All right, so people are afraid of stock market valuations. There is an increase in fear. The VIX is the fear index. So risk sentiment is generally risk off, right? So you want to be a bit more careful when trading. Okay. So let me just, oh no. Okay, I'll type that out later as well. Okay. So yeah, let's take a look at the charts. All right, let's take a look at the charts. Okay, wow, you can see that oil just pushed even lower. Okay, so definitely keeping a close look on 64.08 for me for oil. Very interesting. We might even break below 64.08 later when the US session kicks in. Okay. All right, so I really want to start off with one of the big plays that I see today. Okay, which is the pound dollar. Okay, so the pound dollar is something to interesting to look at now. Pound is generally bullish. It's what I call risk on currency, right? When the economy is doing well, the pound and the euro and the Aussie and the Canadian loonie and the Kiwi tends to do well, right? However, pound dollar, now I'm just going to leave this here, okay? Risk sentiment. Risk sentiment is risk off, right? But the pound dollar seems to be bullish. Okay, so that's a bit that should be a bit of a mind-boggling issue. Like, hey, hey, Isaac, you tell me it's risk off, then why is the pound going higher? Looking on the daily, looking at the market structure, we are making higher lows and higher highs, right? So what is going on, Isaac? Right? Okay, let's go down to the 4-hour. Even on the 4-hour, right, if we were to draw ascending trend line support, okay, we are right on the trend line right now, and we are to do a retracement of the last swing low to swing high. Okay, we can see that price is right now testing this 50% level. Okay, so this is actually a pretty nice level if we want to look for a good entry. Okay, this is a pretty nice level to enter, and in terms of market structure, we can actually play a bounce higher, at least to the last swing high, or possibly even the 2720 target. Right, so I have to take profit. One is at the last swing high, another one is at the negative 2720. Okay, so then people ask me, hey Isaac, where's your stop loss going to be? Okay, so this is going to be a bit risky. Let's go down to the 1 hour to identify the stop loss. Okay, stop loss is going to be a bit far, right? Because for me, I'm a swing trader. I'm more towards the swing trading side, right? So I tend to look for market structures. and the market is making a sideways structure here. There is also another sideways structure here, right? We are currently inside a sideways structure right now. Okay, so failing to break below this sideways structure, we can expect price push a lot higher, right? So where would I put my stop loss? I will put my stop loss, okay, possibly somewhere in the middle of the last market structure. Okay, this will be my stop loss. Now, risk reward, not that great, right? Not that great, but the stop loss is the level which we know for sure I am wrong. Okay, so if price were to break below, firstly, it will have broken the recent market structure. Secondly, it will have broken this ascending trend line support. Thirdly, it would have retraced nearly 100% of the last completed move, right? So for these three reasons, this is actually a pretty strong stop loss, which I don't think should be hit. And if the stop loss is taken out, it just means that I am wrong. Then I need to prepare an alternative scenario, okay? But this is pound dollar. And again, remember, risk sentiment today is risk off. So if I'm going to take this trade, right, I will take it with a smaller position size. Okay, so this is what risk sentiment does for us. Okay, it gives us the warning sign. Okay, so when we take a position, we just want to be a bit more careful. It doesn't mean that we cannot trade, right? It just means that we have to be a bit more cautious. All right, but so far, pound dollar, this is what I see. Okay, so I'm just going to leave it here, right now. Okay, and very quickly, let's move over to the next pair. Now, if you guys have any pairs that you want to look at, all right, please send them my way. Okay, and then I'll do it on a first come first serve basis. All right. Okay, the next pair that I want to look at would be one of my favorite pairs, would be dollar CAD. Okay, dollar CAD is now making a very nice base. Okay, so the dollar on the monthly. Right, the dollar on a monthly, there's a reason why it is actually basing over here right now. Okay, there's a reason why it's actually basing over here right now. If you were to look at extensions, using this as 0.1, 0.2, 0.3, and doing the Fibonacci extension, 0.1, 0.2, 0.3. Okay, we are at a very key extension level. Okay, we are at a very key extension level. Right, so remember, long term, we're identifying key levels, and then after that, we go down to the lower time frame to look for nice trade setups. Okay, so key extension level, very quickly, you go down to a daily, you can see that price is basing around there. Now, when market actually reaches a key extension level, a key Fibonacci level, okay, market tends to trade sideways for a while, right? It tends to consolidate at these key levels. Okay, you change in close, it looks like a double bottom pattern. Right, so what I'm going to do is I'm just going to identify a resistance level, right? Somewhere over here, I can take it at a close, I take it at a closing price, and this will be my resistance level. Okay, and let's quickly go down to the 1 hour. Okay, so the 1 hour, we have a zigzag like that. Okay, now my bias is for price to make a bounce. Okay, my bias is for price to make a bounce, right? But whether it will really happen or not, okay, that's a different story. Okay, 0.1, 0.2, 0.3, and we're looking for extension. Now, look at where the key extension level lies. Okay, it's just a bit off from our daily high. Okay, so I'm just going to back it up and I'm just going to draw a zone. Okay, so this is a very nice zone of 100% extension level. Okay, I can see another zigzag as well. This one here. So let's draw a zigzag. 0.1, 0.2, 0.3. And look at that. This is a 100% extension. It is a 61.8 extension. We're starting to find, and it's also a daily swing high. It is a very key resistance level. All right, so if anything, I'm thinking if price is going to push higher, price could possibly push high into that zone. All right, and if I were to draw a trend line support, right, it's a bit steep, so I don't really like this trend line, but price did react above this trend line. So if I'm looking for an entry, I will wait for a breakout above this high. Okay, there is a possibility that we can wait for a breakout above this high. Okay, for those of you who want to be really sure, okay, you can wait for a breakout above this high and it'll push higher towards this 121.78. Alternatively, okay, I want to go down to a 30 minutes and do a retracement on this last movement. Okay, you can see a negative 61 up there as well. Right, I'm thinking price could come back down to the 61.8. Okay, which is more in line with the ascending trend line support. This can be a higher risk entry, but with much better risk reward. Okay, so we see a price is coming back down. All right, where will my stop loss be? My stop loss will very easily be just outside of market structure, somewhere over here. Okay, stop loss is really dependent on you, right? So if I were to use my higher risk entry, right, more in line with the ascending trend line support and at 61.8 retracement, okay, it gives a better risk reward. Now, very quickly, if price pushes up, I can protect my stop loss. Okay, I can move my stop loss to break even and protect my position. All right, so this is what I see for dollar CAD as well. Okay, so bullish, right? But if you really want that confirmation, you can just wait for a close, a break and a close above 1.2138. All right. Okay, so I have some requests here from Gareth, Euro Aussie. So let's take a look at Euro Aussie. Okay, so again, this dollar CAD, I will also go with small position because risk sentiment is risk off. Okay, Euro Aussie, let's take a look at that. Okay, so let's start off by identifying key levels on the long term first. All right, so price is reacting over here. A very quick reason, probably because of this ascending trend line support. One touch, two touch, okay, and a third touch, right? And if you look to the left, there's also a very strong support level over here as well. Okay, so this is really more graphical, right? I'm just going to put the support level, the monthly support level over here. Let's go down to the weekly. Adjust it for a bit. So definitely a consolidation. We are out of a range now. It seems like price has broken out of the range. Okay, I just want to be clear about that. So that's the next support. All right. So unless there's a weekly close above this, I wouldn't say for sure that the trend is bullish yet. Let's go to the daily. Now on the daily, price is really chopping. Okay, I see a possible zigzag, something like that. Okay, so I'm going to use Fibonacci extension 0.1, 0.2, 0.3. And look, we have closed above the 100%. I'm thinking price could push down. What I'm thinking price could do is push down, test the consolidation area, and then after push higher to the 161.8. If you look to the left, it's this spike here. So graphically, Fibonacci level line up with with a graphical level. So there's a very strong level. This can be our long-term take profit. Okay, just remember 161.8. Let's quickly go down to the 4 hours. Okay, I can remove this level because it's too far, right? And I want to highlight this level still. Is the consolidation zone, the level needed to reintegrate a consolidation zone. Okay, so on the 4 hours, I just want to focus on more recent prices. We see that there are two movements, 1, 2, 3, and a second one is just a retracement over here, right? Because this is a completed move, right? So Fibonacci extension 0.1, 0.2, 0.3. Look at that, the 127 is in line with the daily 161.8. 100% is over here, so we can highlight it as well. And price did tap the 61.8 and is pulling back. Okay, so we are starting to find our take profit targets along the way. Okay, and let's do a Fibonacci retracement from low to high. Right, you can see a 61.8 is in line with our consolidation level, so this is pretty good. Like I said, I'm thinking price could push back down, do a retest of the consolidation level, go up to at least the last swing high, react, push up to this level, react, push up to this level. Okay, so I know there's many steps forward, right? But that's just something that you want to keep in mind, the big picture. Okay, so definitely short term, we should be looking for a drop first. Okay, so 61.8, right? Let's go down to the 1 hour. Okay, so on the 1 hour, we have the 61.8 over here. We see that the market structure is changing. Prices are making lower highs, lower lows. We can expect price to make a lower low, right? But before it makes a lower low, it has to at least make the same low first before it can make a lower low. Okay, and connecting all these highs together, you have a descending trend line resistance, right? So I just want to zoom in on this area here for now because really short term. Doing a retracement of this last move, I'm thinking price has already reacted at 61.8. So yes, we have already reacted at 61.8. If price comes back again, it will be good to enter as well, right? And you can play the negative 61.8. This is a zone, right? I'll use this as a zone, a take profit zone. Okay, this will be a nice take profit zone. Okay, and of course you can have the first take profit at the last swing low, right? So this is exactly what I'm expecting price to do. Okay, for stop loss, very simple. Stop loss, I'll just put it out, outside market structure. Okay, the safest stop loss will be somewhere here, right? But I want to be able to react quickly, so I'll just put it at a spike over here as well. Okay, but there could be a risk that price, there's always a risk that price spikes up, takes you out, and then goes down in your direction. So it really depends on how safe you guys want to be. All right, so Gareth, this is for you, Euro Aussie. Okay, short term. All right. Okay, so we have time for just one more. Let's take a look at euro dollar, right? Since some of you are asking for euro dollar. So remember, risk off, we are shorting the euro. That makes perfect sense as well. Okay, so this is something you can take it like a normal trade. Now, before we look at euro dollar, euro Aussie correlated. Okay, so we ideally should be bearish on the euro as euro dollar as well. But do not forget, okay, the dollar could be bearish in a risk off sentiment. Okay, so let's look at the euro dollar. Again, we start out with the monthly. Okay, monthly, the most immediate key level is this swing high here, right? This swing high. I don't see any other thing. I can tidy it up. Yeah, tidy it up somewhere here, this swing high. Okay, so price has come up to the swing high now. I can only identify the weekly support as this low, right? This swing low here. I want to keep it a bit wide so that I have a bit more space to do my analysis on the lower time frame. Okay, let's go down to the daily. Right on the daily, we see this zigzag pattern. So 0.1, 0.2, 0.3, and you can see that our weekly swing high is in line with 61.8. Okay, so price could, because this trend is so strong, right? Price could possibly push up. I'm saying possibly, yeah. All right, even the market structure on the daily is telling us, you know, higher lows, higher highs. So come down, could make a higher low, or it could be, the higher low could be over here at the graphical overlap and then push higher. Okay, so this is on the daily. We've identified the weekly key level. On the daily, I'm just going to do a retracement, low to high. Okay, and I'm just going to highlight the 61.8 over here. Okay, and let's quickly go down to the 4 hours. So on the 4 hours, we have this nice structure forming, very nice zigzag. So let's use Fibonacci extension, 0.1, 0.2, 0.3. Okay, the 100% is right up here. Okay, so this could be a very large resistance zone for all you know, right? It could be a very large resistance zone. Okay, but not to worry, as long as price pushes up there, should be fine. Now, if we were to connect all these lows together with a trend line, right? It's not the nicest trend line. And if we were to do a retracement of, if we were to do a retracement of this last movement, low to high, right? You see that this 61.8 falls at this small consolidation area. Now we know that price doesn't move in a straight line, right? Price could very well drift down to the 50%, okay, which is in line with the ascending trend line support, and then push higher. All right, so 4 hours not very clear, but I'm just going to put the 50% as a possible support level. Okay, so these are supports, these are resistance. Let's go down to the 1 hour. Okay, so this trend line now is not very nice because it's cutting the candle bodies. So I'm going to remove it. I don't like it when trend line cuts the candle bodies, but I want to be cautious over here. Okay, we see in terms of the market structure is that prices previously has been making higher lows, right, and higher highs, right? However, now market made the same low and market made a lower high. And then after that, market made a lower low and market made a lower high. Okay, so it's telling you that on the 1 hour the trend is changing, right? If you connect all these lower highs together and draw a retracement of this last swing, last push down, high to low, okay, price did come close to the 61.8. all right, so I'm just going to use the 61.8 as a very nice gauge, slightly above. So this actually falls in line. Okay, so euro dollar actually falls in line with our euro Aussie. I will not take a trade on the euro dollar. Okay, that's my own personal preference. All right, because on the long time frame, okay, euro dollar looks bullish, right? Sorry, on the long time frame, yeah, on the long time frame, the euro dollar looks bullish. Okay, limited upside but bullish. Okay, on the shorter time frame, we start to see that while it's bullish, okay, it's really kept below this key resistance level. All right, so euro dollar is not a trade that I would take, right? In fact, this will be more key levels to watch, and I'll watch out for this 122 resistance. Okay, should price break above the 122 resistance, then I'll go long towards this resistance zone. Otherwise, price breaks below this 121.6, I'll go short. All right, so right now euro dollar definitely neutral. Okay, because euro could be bearish and the dollar, like I said, could be bearish, so it's a bit mixed right now, so best to stay away from this. All right, so for Travis, who's asking the euro dollar, I hope this satisfies your question. All right, I hope this answers your question as well. Okay, so with that, to wrap it all up, right, I'm sorry I have overrun again. I'm very sorry for that, right? To wrap it all up, okay, 3 big stories is really inflation fears, crypto bloodbath, and oil demand. Okay, a demand for oil doesn't seem too good, right? Risk sentiment for today and for tomorrow at least should generally be risk off, right? Best place for the day for me will be the pound dollar, okay, and euro Aussie, like we've just covered. All right, so those are the best place for me. Okay, so that's just wrapping everything up, and I just want to thank every one of you for joining me today at today's live trading session. I hope it was a good one for you guys. Until the next time, take care, stay safe, and I'll catch you guys again. And for all questions that you guys may have or feedback that you guys may have, please email support@fpmarkets.com. Future webinars that you guys can sign up for is at fpmarkets.com trading-webinars. Otherwise, you can go to FP Markets, and then under resources, there is an education column. You can click on webinars. It should take you to our webinar registration page. All right, so thanks everyone for your time once again, right? Trade safe, stay safe, and keep practicing on your charts, and I'll catch you guys the next time. Goodbye.